All right. Good morning. This is Dennis Wilborn with the Active Trend Traders, and joining me today is David Grandy from All About Trends. Good morning, David.
Good morning, Dennis. Good morning, everybody.
Are you enjoying the cool weather?
I am. It's nice. Fall is one of my favorite times of the season, or favorite times of the year.
Yeah, it's definitely getting up in the morning and taking a walk. And I know some of the folks who live in some of the cold areas. We have people joining us from Maine and up in the great Northwest. I know it gets really chilly up there. I see from the attendees today, I want to say hi to one of my cousins. How you doing? I see that I'm glad you made it onto the show today. And David, let's get going. I saw Harlan's earlier post today about sit and spin or something like that. We're in the spin cycle. And this seems like that's been going on here now for several days. And this market has moved quickly, but then it just all of a sudden came to a screeching halt. And seems to be either chewing on and digesting its gains, or potentially setting up for a little bit more of a pullback that could offer some great entry opportunities on many of the stocks that we both watch, correct?
That's correct.
So I want to remind everybody that all the materials we present here are for trading purposes only. Traders should always paper trade any new method prior to the risk of personal capital. One of the things is I was doing some research and doing some checking out on the CBOE website. They actually have a paper trading system also for those who would like to paper trade. And paper trading is one of the things that I always suggest and recommend as a place to learn how to trade without the risk of capital. Then there will come the day when you actually step into the fray and start risking your own capital. But it's nice to kind of have some rebar in the concrete that goes into your foundation. And I think that paper trading gives you that. So with this sit and spin, I thought this little poster was appropriate today, David. Two of the greatest qualities to have in life are patience and wisdom. I grew up in the country, and I remember occasionally the skunks would come by, and they wouldn't bother anybody until you bothered them. And if we sat patiently, they would pick up and do whatever they're going to do and then leave without any of that nastiness coming out of their back end. However, if they were agitated, it would definitely smell up the we got one in our garage one time, and it smelled up the whole, he got excited, became fearful, and did his thing, and then our cars for the next, almost 2 or 3 months just smelled like skunk no matter where we went. Couldn't understand why when we would go to church, nobody would sit next to us. But patience and wisdom, it works in trading too. I want to remind everybody that David and I will be at the World Money Show February 5th through 7th. We actually got our speaking day. We will be speaking on Saturday the 7th. And if you know anybody in the Orlando area who works with a trading group or anything, let us know, because we would love to go out and do some presentations on the art of trend trading there in the Orlando area. Or if you're in the Orlando area, make sure you get by and see us. We, as usual, as we've always said, we'd love to talk about stocks. So if you do have a group, I'll be plugging in with one group, the Delaware IBD meetup, this coming the 18th, which is Tuesday, to do a little bit of chatting with them about some of the studies I've done on the IBD 50 and some of the studies I've done on the IBD patterns, with suggesting some alternative entries that could lead to gains where a regular IBD pattern wouldn't have. So this week, the markets I don't know if powering higher, David, is really the term to call it. But as I look at the charts currently, I sit there and go, okay, but are we at a top? I'm not absolutely certain because, but I know that the markets are mixed. One day you'll have the NASDAQ and the S&P up. The next day and the Russell down. The next day you'll have the Russell up. And so we're a little bit in a mixed market type of standpoint. And that does not speak to strength in the overall market. The S&P made new highs, but appear to be at a critical juncture. When we look at the chart here in a little bit, we will see how it is over the last 4 days has put in several candles that show indecision. NASDAQ 100 new yearly high, and it has breached and gone above and is now resting above one of the swing highs that it made back in the year 2000. So we're at 14-year highs. Haven't taken out the absolute high. And, David, when I review that chart and go back on the NASDAQ and look back to the year 2000, I remember thinking, in the 2005, 2006 time frame, we will never breach those levels again. But guess what? Here we are 6 years later, pushing up against those levels, and I find it, kind of really interesting. And it just goes to show that there are opportunities in the market, and we just have to be, as the first poster showed, patient and wise. The Russell is thrashing a bit, and so outside earnings and influences, retail earnings over the next couple of weeks, they'll be coming out, and a boatload of those will be coming out, and that'll be kind of ending the earnings season for this quarter. At the same time, I think we're one news story away from the market either accelerating to the upside or accelerating to the downside. And it really, at this particular point, is kind of a coin toss. You may not like to hear that, but that's where we're sitting at right now. The markets are extended, so it's almost too late to get long in any of the ETFs that mirror the individual indexes. But at the same time, we're not getting strong signals to say, hey, let's go short. So here's where we were last week. And the question we were asking last week is, does this move have staying power, or are we at a temporary top? And the answer this week was, it appears we have a little bit of staying power, and we're asking the same question, are we at an intermediate top? This was a snapshot I did of the percentage of stocks in NYSE above their 20-day moving average, and as you can see, here's where we were last week. About here, we had rolled down below the 80 level. Today we're selling off a little bit more. Back here, this is where the strong move up started about the 15th of October. And the market has accelerated to the upside in almost a too fast type of fashion. And so we'll be looking for, will it emulate the going up? Will a potential falling down emulate that, emulate what happened on the way up? Oftentimes that is what happens, but right now we have nothing in the indices that are saying, sell me or get short, and so no bearish, overtly bearish clues. However, I was looking at clues, David, earlier today. And occasionally I do take a look at the VIX, the volatility index. And it was quite interesting. I went back here and checked some recent lows of the VIX back on, and this is the weekly chart of the VIX. And as you can see, we've been working basically for a little, almost 2 years now, in a channel where when the VIX would get down low and bounce, the markets would typically top off and fall from there. And what do we see here? On June 30th, The VIX hit a low, the Russell hit a high, 7-1. I found some direct correlation between the Russell and the VIX. The VIX typically emulates is a volatility index for the S&P and the NYSE, but there was almost direct correlation. VIX on 9-1 hit a low. Russell hit a high at 9-3. VIX hit a low the week of 11-10. That's this week. And the Russell hit a high this week. And is this indicative that we may be bouncing and heading back up? The ETF that emulates the VIX is the VXX, and it itself, I know that some people do trade the VXX. It does offer some short-term opportunities, but don't look to hold VXX long-term if that is one of the things that you like to trade. So, David, that's what is happening there. Let's take a look at some of the charts, and then I was looking at BABA a little bit earlier. BABA still looks promising, but it's exercising its right to rest a little bit. So here we go. S&P on a daily chart. That's what's on the left here. What we see from the S&P is we have 1, 2, 3, and what appears to be a fourth day of either a spinning top or a doji candle. Now, for those of you not familiar with candlestick patterns, a doji is a indication that the underlying entity is at a point of indecision. And as we see, we've gone almost sideways. And so the indecision, there's little impetus to be, or catalyst to propel us up. And right now, there's little impetus, catalyst to propel us down. And that's why I indicated on the overview of the market that we could potentially, this could be a news-driven event. Something over the weekend could happen. And if it was dramatic, the decision that the market may make is to roll over. If it's positive for any reason, the market may make the decision to continue on into its uptrend. But for right now, we have no overtly bearish signals on the S&P to say, yeah, it's time to start, looking to short the S&P. NASDAQ has just continued to power higher. This number here, 4147, that is the swing high back from, I want to say, about June of 2000, and that was a clear swing high. Now we'll look over here on the weekly chart, folks, and I'll roll this up a little bit. This 4816 is the ultimate high, or the all-time high of the NASDAQ that was hit back in March of 2000. And clearly, if we keep on track, or if we get some acceleration to the upside, that becomes a potential target. And so somebody made a statement that shorting the VXX is a great way for having kind of like a turbocharge after the recovery starts. Yeah, because it falls out of the sky really, really quickly once the recovery starts. And so let's see what else we're looking at, David. So that's something I'm looking at as I assess various things in the market. We've got also the Russell. David, you and I were talking a little bit earlier about how Russell, it took out this swing high that was at 1183, pushed on up to about 1185-ish or 1186-ish, but then yesterday put in what's called a bearish dark cloud cover. It's almost like a bearish engulfing, but just a little bit shorter of that. And today we're getting another spinning top. One of the things that is of interest with the NASDAQ, correction, the Russell, is we're getting the TSI turning over. We're also getting a continuation of the downside momentum, downward momentum. So if we get a close below the 8-day here, and some acceleration, we could see that the Russell could potentially sell off at least back to the 1160 level. And so, David, I know that you would probably like to see one of these kind of moves where we get a continued sell-off to about there, and then at least a bounce back up to there, and there, and then a move higher from there. And that is certainly one of the potential things that could happen. Or the flip of that could be we get the sell-off, it gets to here, and it just reverses. Let me see if I can put in the other potential option here. If we sell off into next year, which we could have the Santa Claus rally, bounce back up towards the end of the year, hits here, and then falls back down and goes into a correction going into next year. We shall see. As indicated on the weekly chart, and I'll just highlight this to everybody really quickly. On the weekly chart, David, what we have, if we were to finish, the market was to close right here today, we would have a shooting star doji, or almost a gravestone doji, which is a candlestick which is indicative of a bearish reversal signal. And if we break below that at the 1171 level, that could propel us downward. We would have made a similar, almost like a double, short time double top here. And we would, of course, lay the Fibonacci's on there to figure out where we might find some support. So that's what I've got for the market today, David. It's, like I said, it's mixed. Two of the indices looking, well, one of the indices looking indecisive, that's the S&P. One of the indices looking strong, that's the NASDAQ. One of the indexes, the Russell, looking like it's ready to do a reversal. Therefore, we have mixed signals across the board. Are you ready to go?
I am ready.
Okay. Now, folks, I'm going to be switching my mic off here and answering questions. So if you do have any questions, please type them in for me, and I will address them. And also, if you have any stocks you want us to review, you can start putting those in, and I'll start making a list. Thanks.
Okay, thanks a lot, Dennis. Yeah, it's just kind of a sit and spin market where indexes are up, but leading stocks really aren't doing a whole lot unless you're in BABA. That's about it. It's really moving. BitAuto's making a nice move today. So there are some stocks out there that are making moves, but everything else is just kind of sitting here consolidating, which is not a bad thing at all. I mean, we wanted to have this happen. It's very hard to buy into a market that just goes straight up off of the lows and makes this huge move like a freight train out of control and try to grab onto that. We'd rather wait for the train to settle down at the station here and let us on, and that's what we're seeing in a lot of leading stocks as we sit and spin here in the indexes. It's setting up some really nice patterns that we can trade from, and that's what we do. Our trading plan, we don't chase stocks, we let them come to us. We buy support and we sell resistance, so we're just looking for stocks that are in nice uptrends that are pulling back in an orderly manner to areas of support that we can buy. And I'd love to see the Russell pull back for a few more days here and then take out that high that you were pointing to and start moving higher. And if that should happen, we're going to have a lot of stuff to do on the long side. So everything's going pretty good right now. It's just like you had, Dennis, for your original slide there. Patience is the key, and sometimes that's a week, sometimes it's a couple weeks, sometimes it's a month or two. It just is what it is, and the last thing we're going to do is go out and force things and just trade for trading's sake. So we're really excited about the patterns that we have here, and I'm just going to go through a couple of them here. So uptrends and how to trade them, downtrends and how to trade them, change in trend patterns. Those are really the three things you need to know, and we are in an uptrending market, so it's really all about uptrend patterns right now, and that's all of our watch lists on our newsletter is loaded with those alongside uptrend patterns. We don't have any short sell patterns on our watch list. We have a couple of short positions that we're probably gonna take care of here in a little bit. But so let's talk about some uptrend patterns. This is BitAuto. This is what it looked like yesterday before earnings. As you can see, it had a really nice uptrend here, and it pulled back, found support, rallied up here, and then did a really nice little pullback into earnings, staying above the 50-day mostly. And then this is what it looked like this morning, and of course it's much higher now. I think it's $90 or something right now. So it's really having a strong day off a strong report. We actually featured this in a secondary product we have called Earnings Call, where we're just looking to take advantage of the earnings pops and drops in leading stocks, and we're just looking for common patterns. We don't do a lot of trades. We don't, there's, companies report earnings almost every day. We're not going to be going out and doing 3 or 4 trades a day. We've only actually done about 4 this earnings season, but it's just looking for the quality stocks and the patterns and then taking them, because all you need is 3 or 4 great trades in earnings season, and you can make a few grand just off the earnings pops and drops, which is what our Earnings Call subscribers are experiencing. So this is what we did. So now, what do we do now that it's at $90 or whatever? We're just going to wait for it to set up another pullback, and we'll be more than happy to feature it in our main newsletter. Like, this is FLT. This is a perfect example of what we need to see happen with BitAuto. Here you have this stock broke out, and it's done nothing but consolidate in a very nice, orderly manner back to various support levels here, and 50 days even, in play as well. So, when a stock breaks out, it's tempting to just, go out and jump on it, but most stocks, almost all of them, will eventually at some point consolidate and give us an opportunity to buy at support, which is a much lower risk entry point than chasing a breakout. If you bought the breakout here, you're underwater right now. So that's what we're trying to do. That's what we're teaching our subscribers, and our newsletter is full of these types of setups. FleetCor just got added today to our alongside watch list. So if you want to check us out, we have a 15-day free trial, and just go to our website, tell us what email you want it sent to, and that's it. There's no credit card or anything, and you'll get everything our paying subscribers get completely free for 15 days. So that's 6 newsletters a week and a watch list of leading stocks and patterns and how to trade them. And then when a stock on our watch list triggers a trade, we'll send you a trade trigger alert. We're buying so many shares of X stock at X price, and we do the same when we're locking in profits or if our stops hit. So it's really easy to simply trade in tandem with us, and that's about it. So I'm looking forward to moving on now and hearing from you guys of stocks you want to talk about and questions you have, and let's start that portion of the program.
Okay, David, thanks a lot. The sound has faded away. David, is the sound back? Not you, David, but the David who asked the question. Okay, great. Let's get back here, Dave. We'll finish off with a couple of items, and then we'll jump into looking at some stocks. So with the active trend trading, as David said, is over the last almost 6 weeks, there has not been a lot of great setups. And so here's how we've done since we started offering the timing service back in June. I'm really pleased with the results. Our margin count is up 27% for the year. Our IRA is up 50% for the year. And we're currently invested about 17%. So the objective, our motto at Active Trend Trading is we try to clarify, simplify so that people can multiply their accounts. The guy who did the research with me for the Active Trend Trading System, Mike Traeger, he and I basically, both of us used to work in professions that demanded long hours and a lot of time investing. And so when we started looking at the Active Trend Trading System, we wanted to pull some together that would be basically for a system for busy people who are still working. I'm really glad Mike is also going to be coming on board with the Active Trend Traders as a contributor to our newsletter, and also he is bringing his Traeger triggers with him. They're a longer-term type trigger for those who need to be invested for a longer period of time, and it's primarily utilizing the index leveraged ETFs, what we call the power ETFs. And so, Dave, here's just a little blurb about what we do. Active Trend Trading was developed to equip traders who are still working for a living with a system that works well in any market condition. I know some of the emails that I've received from some of the folks who have been trading things like TNA, utilizing the system. They've done really well on this last bump up with TNA. So our premium subscription is $49.99 a month, but we give you about $300 worth of value with all the training, the webinars, the updates. But as Dave was saying, email me directly if you want even a better monthly rate. And here's my email, and you can contact me there. So, David, that's what we have right now for this week. And I'm ready to start looking at some stocks if everybody else is. And I want to remind everybody, one, have a great weekend. Keep growing the egg and trade wisely and profitably. Any last and finals for you, Dave?
I don't think so. Yeah, I think thanks for being here, and looking forward to talking stocks.
Okay. So anybody have any particular stocks you would like to take a look at? Just type them in and tell us if you're in the stock already or looking to get in. And if you are in the stock, tell us where you got into the stock. Okay. Okay. The first one, David, is Baba. And you want to do the review on BITA, B-I-T-A?
Sure.
And do you have LTS?
LTS? No.
Okay, I'll take care of that one. What about EPU?
Negative.
Okay. And I'll do Tesla, if that's okay. So, Baba. Baba has made just an absolutely great move, up about 27% from its IPO breakout, which was down here around the 17th of October. That date should stick in everybody's mind because that's when the market reversed and started running higher. And so, as we can see, we've got about a almost 29% up move right now. Dave and I were, speaking about Baba today. Right now, we have a consolidation pattern that's going, straight across, and we are bouncing off the 8-day moving average. I would like to see, in order to potentially get into Baba, I would like to see a little bit, maybe a drop of the 8-day, and maybe a pullback all the way back into the 105 to 107.50 level, and then see if we get a reversal there for a move back up. Because what that would do for us, it would give us about, looks like about a 12.5 to 15% gain if we reach, come back up to the recent highs, and then we could do another time and then take off on a new pattern, which would be awesome. But that's what I'm looking at. I do not think that BABA is going to, I definitely don't think that BABA is going to be going away. We just need a good setup now to get into the stock. And so, yeah, somebody said that they are in at about 119, which would have been either this day or this day. And, following either the active trend trading or the all about trends method, that would not have been a valid entry for us, would it, Dave?
No, we just, like you said, we just needed to see it consolidate here, either sideways or downward sloping, and that'll set up a great opportunity for us.
Exactly. And so, but one
part of it is, this is a new issue, and it's really difficult to just jump on a new issue because we've had many times where we've seen people do that, and it goes the other way. Grubhub's a good example, recent example of that.
Yeah.
So, it's important that the stock proves itself, too. And, Bill O'Neill in his book, he talks about, if you're going to buy an IBD base, you want to have a prior run-up before the base. And the reason for that is you want to see that the stock has proven itself and institutions are buying into it. So we've seen that now with BABA, and now it's just a matter of a pullback and a consolidation, and that sets up the ultimate low-risk opportunity for us.
Yeah, and one of the things about BABA, which is really cool, and this is why I promoted it onto our the private my private list with stocks that have weekly options, David, is this does now have weekly options. And so if I bought here, it does provide some potential for selling premium against my position to lower my cost basis. So do you have your stock, David?
I have BitAuto. I'm all ready to go.
Okay, I'm switching to you. There we go.
Okay, so we've got a pretty strong breakout today following its earnings report this morning. So you got a couple things. You have the pullback here ahead of earnings, but then you also have what we call a right side of the cup crossover. You can see it had a nice run up. It's building a base here, and it's clearing that resistance today, pretty impressively. So, for us, the only reason we didn't feature it in our core newsletter is because, we had earnings, and we didn't want to we have a certain group of folks that are willing to take that risk ahead of earnings, but we have a lot of folks that aren't. So, from here on out, it's just, okay, will we pull back from here, and this area that was resistance, this green line, should now act as support. So if we get a nice pullback like we see here to this green line, we'll be definitely featuring it.